Well, good evening, everybody, and welcome to the August Vivio Club meeting. We are very excited tonight to have Lynn Ostrem here, and she's going to be talking about her stock screening techniques in a presentation called So Many Stocks, So Little Time, which I think you're going to find very fascinating. If any of you don't know Lynn, she's probably one of the main people that's helped investment clubs for countless hours over the years. She's been in the famous Crow River Club since 2001. With that, I'm going to turn over to you, Lynn.
Hi, everyone. Welcome to So Many Stocks, So Little Time. I am Lynn Ostrem. I'm talking to you from Minneapolis, Minnesota. I've been doing these things for a long time. This was a presentation that was created for InvestEd in Charlotte this year, and so many people liked it. They came back, and I did it twice at the show, and I don't know why everyone is so darn interested in processes, but you know how we want to know what someone else is doing because we think that maybe they have something to give that that we haven't thought of before, and so I too am always interested in how people do what they do. This seminar was something that Marianne Davis asked me to do. I had described my process to somebody for something specific on a message board, and she called me on the phone and said, please do this for InvestEd. So I have a three-part process that my club uses to find and ultimately buy our stocks. This is basically phase one. It's how we initially screen or find stocks. So with that, let me get to the basic. Oh, there we go. All right. I'm going to lay this out for you in the way that I intend on teaching it tonight. First and foremost, I want to introduce you to my process. It is basically it's really, really simple. I start with FinViz as an initial search screen. And then after that, and I'm looking for just anything that jumps out and bites me that meets my criteria. And I'll go over my criteria before we go to FinViz. But I like FinViz because I don't have to worry about formulas. It's not difficult. It's not a big to-do, and it counts down all my metrics. So I know immediately if I'm too liberal on something or maybe too conservative on something. The next thing that I do from there is I take whatever list comes from that and I go to Louis Navaliere's Portfolio Grader website. Now Louis Navalliere, for those of you who aren't familiar, wrote a book called The Little Book That Makes You Rich. And it's really an interesting book. He is a quant investor. And the reason why I use his website is because he's really big on positive institutional ownership. He is only looking for stocks that people or the institutions are buying into, because as the little jet ski, we can literally get ahead of that big cruise ship called institutions, and whatever direction they're turning, we can usually get there first. And if they're turning the opposite direction, we can usually get there first too. So it's nice to look at his ratings. The next thing that I do after I hone those stocks down is I go to big charts, and I'm looking for companies whose industries are beating the market, and then I'm looking for stocks who are beating their industry. And then finally, whatever's left over that gets pared down, I actually go to smartmoney.com, and the nice thing there is they have a compare tool, so I can compare stocks in the same industry. So in essence, I am in a neighborhood, and I'm just making sure I have the right house in that neighborhood now. From there, I'm going to, you'll notice in your handout, Lori, I'm assuming that you got handouts to people or that you gave them access to them.
Yes, they're posted.
Oh, great. Well, the handout is going to have a lot more than what we intended on going over today, but it just has different. It's just a different mindset of how you can use FinViz for specific searches, and we'll do a couple of those too. Beyond that, I'm not going to be doing finding fun presets, not today anyway. We're going to just spend our time on the other, and that's where we'll begin. So for FinViz, my initial search, before I even begin and get started, there we go, before we even begin, I would like to go over some of my negotiables and my non-negotiables with you. First and foremost, non-negotiables. I don't care for anything that's sold over pink sheets or over the counter. I don't want any penny stocks, and that's not going to be an issue because FinViz doesn't cover them. So that protects us right there. I don't want any thinly traded stocks. I want stocks that trade at least 100,000 shares a day. And that way, if I do happen to buy, let's say, a small cap stock and I made a mistake, I actually can get back out of it with relative ease. Now, thinly traded stocks that are, or how many shares you want, that's really relative. I think we're all a little different. I know that Marianne Davis says that she doesn't want anything less than 250,000 shares trading hands a day. And if you're an income investor or you're looking for good, solid, stable dividend stocks, you might want to make that 1 million shares a day. The more shares that trade hands a day, the harder it is to for that stock to make big jumps up or down. So it just lends toward less volatility. Stocks in good standing. You know, I have a hard enough time. I don't know about you, but I have a hard enough time with stocks. And you know, to start with a stock that already has institutions up in arms is just not a way to. It's just not a way to invest, as far as I'm concerned. So I want stocks that have buyer better ratings with the analysts. It's going to be a lot easier that way. Next, all my stocks need to be optionable. I learned in 2009 and 2010 that no more stocks allowed to sit in my portfolio and do nothing. They all have to be worker bees. And if they're not going to be a workhorse and earn me money, then they're not going to stay there. Next, because I like to buy options, I have to buy 100 shares at a time, or at least sell options 100 shares at a time. So I have a mental figure in my mind of $5,000 that I really don't want to exceed as an initial investment in any new stock. So that would backs out to $50 a share. So I limit all of my initial searches to stocks with $50 or less per share. Now, you can do it any way you want to do it. I mean, I've helped people go in and find $15 to $20 per share stocks because that's all they had to invest for options, and it worked really well for them. I think that probably 3/4 of my portfolio are all over 50 a share, but they didn't start that way. They grew that way. Also, I want stocks that are profitable. That means they have to have a PE or a net margin, and so if they don't have an E, they're not going to have a PE. So I just want it above 0, and then we can hone it in from there. Now, as far as my negotiables go, FinViz doesn't have debt to capital, so I use debt to equity, and I want it under 50%. That leaves, that pretty much knocks out all the financial institutions, or a lot of them, but it leaves room for the manufacturers that I'm always looking for. I want a stock with a 5-year historical earnings growth rate in double digit because that tells me that it's done well in the past. I want a stock with a projected 5-year earnings growth rate of double digit because it tells me it's going to stay that way. And then finally, I want a PEG ratio of under 1. That means that the stock is on sale. And so those are the items that I'm looking for. Let me see if I can get on the screen. There we go. Let me go to FinViz now, and let's do some playing around with this. You might want to do a side screen and look at this. If you come down here to your taskbar, for those of you that are not real computer literate, if you right-click on your taskbar, you can show windows side by side. If you want, you can show the window that I'm working at, and you can open up FinViz probably in the other window. This is the homepage for FinViz, and it's at finviz.com. Now, the first thing that I want you to notice on this screen is you have the Dow, the NASDAQ, and the S&P 500 together. And this is really important because if they should all look alike. If any one of them looks different from the others, something just happened or something is in the process of happening, and you need to know what that is before you proceed. It's just a real cautionary thing. Below these, and you can see they all look pretty much alike today. Below that, you can see how many stocks are advancing and declining, how many had new highs and new lows, how many fell above or below their 50-day, their 200-day, and finally, at the end, you can see who won the war today. Now, if you've ever had anybody, like if you've been to these Marianne Davis classes where she talks about wanting to buy options on an up day, and you want to know how do you tell if it's an up day, well, you can come right here and see that today the bulls were ahead 54 to 46, and I would call that barely an up day, but there you have it. Below that, we've got the heat map, which I'm not real big on. You have stocks that were positive today, stocks that were negative today. Below that, you have stocks that are trending, and this is kind of a favorite of mine. Let's say, for example, that you want to sell some puts. So you would want to look for stocks that are riding their support trend line. That means they've dropped down low. That means their puts premium should be higher. If you would like to do some buy rights or do some call selling, you might want to be looking for stocks that are at trend line resistance, because that's when you're going to get the highest call price. Then for me, my favorite is up channel, and I'll show you why. It's because everything's in an up channel. I like a good, clear, defined channel, and you'll find that if you buy at the top of the channel and sell at the bottom of the channel, and buy back at the top, it's a good way to make some money. But I just want to see stocks that are climbing, and so you see this right here. This would be a trend line support, and I don't see. Is there any? I don't know if there's any. This one's in a breakout. So there you go. Those are the kind of things that I like to look for. Okay, at the bottom, as you go down the screen, any major news that came today, you can see Cisco's up 9.6% today, and we don't care about that one. Walmart's down 3.3%. That's pretty big for Walmart today. So you can tell that there's been some news. Here are your futures and your treasuries. And for those of you that want to learn more about this site, there is a guided tour. So what I'm going to do is I'm going to come back up to the top, and I'm going to click on Screener. That's where we're going to work today. I ignore the first line. If you are just looking for one stock, plug in Search Ticker. If you're looking to do several stocks at the same time and compare them, come down to the tickers. So this is where the plural, you can put in more than one there. We have filters that allow us to screen for stocks. They are descriptive filters, fundamental filters, and technical. Or you can have all of them together. That's too busy for me. I like to keep them separate. Below that, once you have set some filters and done some screening, you can view the stocks that are left over in by their valuation, by financials, by performance, technicals. I mean, there's quite a few views of the final results. The results come 20 per page, and you can see every 20 down below. My favorite part of this whole screen is right here on the left. If you can see this, it tells us that right now today, FinViz has 6,771 stocks in their universe. And if you'll watch that number as we work on these screens, you're going to be able to immediately tell which metrics most affect our screens. And then you can alter them as necessary. So I'm going to start with, I'm going to go to my non-negotiables first. I want average volume over 100,000 shares a day, trading hands. Okay. I want to know that and note that just dropped it from 6,771 stocks to 3,480. I want to know that the analysts like this stock, so that's going to be buy or better. That drops us to 2,085. I want stocks that are optionable. That drops us to 1967. And I want stocks that start out under $50 a share. There's 1,626. Now I'm going to go and listen. I'm going to do this more than once, so you'll get to see this again. Fundamental screen. I want a PE, so I want it profitable, meaning over 0. 1189. I want to know that the stock has at least 5 years of history, double digit, so I want it over 10. That's 438. There's a lot of them that dropped out. I want to know that they have at least double digit going forward, so that'll be over 10%. There's 314. I want debt to equity to be under 50%. And finally, I want a PEG ratio below 1. That drops us down to 77 stocks, and that is down from 80 2 hours ago. So I don't know what happened, but there you have it. We have 77 stocks on our list, and as you can see, there's 20 per page, and there's 4 pages of them. So you would have to click next to see the next 20. Now, one of the things that you'll notice is down here in the far right-hand corner, there's an export button. And the nice thing about that is you can export all of these stocks, all 77, to a spreadsheet where you can save them, manipulate them in any way that you want. 77 is actually, I think, a good number to start with because it's really easy to hone these down. But we've come a long way. We've come down 6,000 stocks in about 30 seconds, so I think we did pretty good. Export. I'm going to click the export button and bring up my, I hope, there we go, bring them up in a spreadsheet. Now, I already know there's 77 stocks, so I don't need this column. But I am going to open up and give myself a new column. I'm going to call it NAV for Louis Navalier's rating. And these are all based on performance, and that's not the screen that I wanted. What I wanted was an overview. So let me change that really fast. There we go. Bring this one up. There we go. Let's get rid of that number column. I'm going to add one for Navalier. And you can see here that we have a lot of different stocks and industries and sectors. I don't need any of these, so I'm going to delete that for now. So here's what I've got to work with. They are in alphabetical order, and so the reason why I download these to a spreadsheet is because you cannot grab these tickers and copy and paste them from the website, from the FinViz website, because of the HTML coding, and that's why I like to do that. What I want to do is grab all of these ticker symbols, and the next thing I'm going to do is I'm going to copy and paste them into the Louis Navalier website. So while we're so let's get back to that. Next on my list, now that I've done my initial screen, is I will go to the Navalier website. And before we do, I want to kind of tell you a little bit about it. Louis Navalier, like I said, is a quantitative analysis guy. He's been doing it for 30 years. He has a three grade system. The total grade consists of his quantitative grade, which is 70% of the grade, and fundamental grade, which is 30% of the grade. So the quantitative grade, he will tell you, is a proprietary number that covers alpha and all types of odd numbers that I don't understand. But in his book, he has a whole chapter on it, and he'll tell you basically it boils down to a big institutional movement in or out of stock. Now, if a stock has an A for quant, then that means there's heavy institutional buying at the time. If it has a B, it's moderately heavy buying. Navalier doesn't like anything boring, so he doesn't like C-rated stocks. Now, I personally like a C-rated stock because that would be like my Pepsi. Pepsi doesn't move a lot. It does grow a little bit, but I can rest assured that it's not going to be exceptionally volatile, so I can sell covered calls on my stocks, and I can trust the dividend's going to be there. So I kind of like C stocks. A D means there's moderate institutional selling, and then an F would be heavy institutional selling. And so I like to look for D's and F's and kind of get rid of them, because I only want stocks that are right now the institutions like, because I know that they really move the market and I want to ride along with them. Okay, so we're looking for A's and B's. Now, obviously, the quant grade is going to heavily influence the total grade. So if the quant is an A, most of the time, so is the total grade. Okay? All right. So that's how we do that. Now, let's go to Navalier's website. In your handout, I have given you a link. Ignore the one at the top of the page. If you can go to navaliergrowth.com and you can register to get on this website, but it's free. And if you do that, I promise you're going to get 10 advertisements a day, and then he's going to find out where you live, and then he's going to stuff your mailbox at the same time. So if you use the link that I gave you in the handout, it goes directly to this site. Now, you don't get to save any portfolios unless you register, and so I think it's a trade-off. I think it's worth giving up being able to save portfolios in this thing. You can always just copy and paste them into a spreadsheet, but I think that's far better than having to deal with the avalanche of mail that you would get in Loop. So I have copied my ticker symbols. I'm going to click in this box and press Control V. I'm going to paste all 77 of those things right into this website, and I'm going to click Submit. And what it's going to do is it's going to bring up his ratings on all these different stocks. Now, the total portfolio grade is a C. That tells me there's probably plenty of D's and F's, and boy, we can see them already. I'm going to put them in order by total grade, bringing the cream of the crop up. Now, what I've done is I've gone through, so there's some AAAs. These are going to be the best ones. They're also going to probably be the more expensive ones. AABs, there's plenty of those. Let's see, what did I look at here? I was looking at these earlier today, and I wanted to point out some things that I saw. Let me see if I can find them. You see, as we get down, the farther we go down, you start seeing more C's, and then we get to the bottom, and you can start seeing D's and F's. Here's one. I'm not sure what the name of the stock is, but I took a look at its report, and you can see that it's been bouncing, but it's been starting to drop, and now it's in the C range. But notice that this is from July. This is a 12-month rating of this stock, and you can see that just last week it was downgraded to a D, and that's real important because which means this probably was just rated to an F last week. So you can kind of get ahead of the general investing population if you kind of watch these. It's kind of an interesting thing. Do not click on your back button. Click on Back to Portfolio, or you'll get bumped from the site. I do that a lot. I get bumped all the time. Okay, so I'm going to put it back in order. I wanted to show you some other interesting things on this. Let me see if I can find here we go. This one was interesting, I thought, in that it finally in December it made it to a strong buy, and then it dropped down to just moderate, and now it's dropping down again. And I think that's the kind of stuff that you need to watch for. When these institutions buy and sell, they can't buy all the shares that they want, and they can't sell all the shares that they want in one fell swoop like we can. They have to do it over a long period of time. And so this is what I mean by, if you watch these, you can actually see the selling start to occur or the buying, and you can pretty much get ahead of it. Okay, so there was one, ENS. It didn't look as hot on an individual basis, but I liked what it looked like here. This is an AAB rated stock, and you can see that it was just upgraded to an A this week, so it must have dropped back down and came back. So here's a stock that's on the move up, and that might be something that you'd be interested in, or should be interested in, stocks that are gaining favor with the institutions. So what I typically do in a case like this is I will put these in alphabetical order, the stocks, and then I come down here and I will do a split screen, and I will take my spreadsheet. There we go. I'll take the spreadsheet and I will I'll put it side by side, if I can snag this somehow. There we go. I'll put it side by side with the Navalier, and then I just hand type these in. I just read right on down the list and hand type them, and then when I'm done, I just get rid of the Navalier list. What I did do earlier today was I downloaded these already, and I can tell you, out of the 80 stocks that I had earlier today, 77 now, if I got rid of all the D's and F's, I was left with 35 stocks. When I got rid of the C's, I was only left with 16. So that's why it's not bad to start with 70 or 80 stocks. So once we have narrowed these down, the next thing that I do is I take whatever's left over, and I do have some to show you, and I go to Big Charts. That would be next on my list. What I'm looking for at Big Charts is I'm looking for stocks that are in industries that are beating the market, and then I want those stocks to actually I want those stocks to be beating their industry. So a couple of them that I looked at, or I gained from that list that we just looked at, was one was called LQDT, Liquidity Services. They're like a mail order company, so they're going to be in the internet industry, I think. So when I come to big charts, I will plug in and just look at the basic chart. I come down below the quote screen and I look at the industry. Now it's going to take me away from liquidity and it's going to take me to the U.S. Broadline Retailers Index. Here I'm going to click on industry chart. I'm going to change the chart to a one-year chart compared to the S&P 500, which is my benchmark, and then I'm going to plug in LQDT again because I want to put it on the screen. What you're seeing here is the S&P 500 is the purple line, okay? And here is the goldenrod is the actual industry, or the U.S. Broadline Retailers Industry. And you can see that the industry is probably 10 to 15% above the over the course of a year, above the benchmark. And then here is liquidity. Here's the stock, which is riding right around 100% increase over the last year, and it's doing well better than its industry. That's the kind of thing that I'm looking for. And if I'm lucky, I'll find 4 or 5 of them out of 100 stocks that I screen for. Let's look at something. Let's look at something else. I'm going to show you one called multimedia. This one has a good chart. It's multimedia games holding. It's in the gaming industry. If I click on industry below the quote line and click on industry chart, change it to a 1 year compared to the industry or the benchmark, and then MGAM, you will notice that what happened? Oh, I guess I didn't get my stock in there right, did I? There we go. Okay, so you're going to notice that the stock is doing really, really well, but look at the industry in gold. The industry is running, actually the industry average is running at a loss for the year, and it's definitely well below the market. Now, even though if you'll notice the stock is gapped up 3 times in the last few months, I mean, it looks like it's doing really, really hot. But you know what I worry about? One little piece of bad news in the gaming industry, and I think it's just going to yank the stock right out of the heavens. Usually stocks will trade in sympathy with their industry, and so I try to shy away, even with good stocks, I try to shy away from industries that aren't doing well, because I think it's a time bomb waiting to happen. Okay, and that's just my opinion. We're all different. I want to show you Cubist Pharmaceuticals. That's going to be, where's my symbol? CBST. This is another one that came up as an AAB rated stock on Navalier. If I click on industry, there we go, and industry chart, change that to a 1 year compared to the S&P, and plug in CBST, you're going to notice that we have an industry that is just soaring well above the purple S&P 500 line. The stock is not doing so well, not doing as well as the industry, even though it's beating the market. This is what I call being in the right neighborhood, but maybe having the wrong house. And this is where I would definitely be looking at who the players are in this space, and who might be, because this is obviously a really good-looking industry. And sometimes when you're in search of one stock, you might end up running into an industry that's good and change your stock idea, but keep the industry. Just a couple of more just to give you an idea of how I do this. PIR is Pier 1. This company has been, I used to buy this stuff when I was in college. I can't believe it's still around. I guess I'm showing my age. If we come to the, it's in the home improvement retailers, so basically it should be specialty retail, but that's where they chose to put it, so I'm not going to argue with them today. S&P 500 for 1 year, PIR, will show you the perfect graph. You're looking for an industry that is exceeding the market by a substantial amount, and then here's a stock that's actually beating its industry by a substantial amount. So to me, that's the perfect storm. That's exactly what I'm looking for. Okay, so one more I want to show you, and then I'm going to move on to the next screen. Western Digital is still making solid-state drives. And it's, they whittle it down now. There's only 3 companies in the world that are making these things. and I want to plug this in. It's had a good year. You know, last year was a really bad year for it because it has a lot of activity in Thailand, and they got annihilated. Now you can see that the industry is far exceeding the market, but this particular stock has had some serious trouble. If you compare it to one of only two competitors, Seagate, you'll notice that Seagate again is another really good-looking stock beating in a decent industry right now. I don't know how long that industry has. We think that you know, it's just like, you know, they're saying like Coinstar and the rest of them that, you know, they're making buggy whips that are eventually going to go away. But isn't everything eventually going to go away? I think it's going to be a long time before we get rid of solid state. And our club's been investing in this, and we've had really good luck with options on this stock too. So anyway, that's how I use this, and I think you'll find that if you restrict yourself or try to hone in on stocks that are in industries that are beating the market, I think it's going to be a lot easier than some of these that are just, you know, flagging the market and or worse, you know, underperforming the market. And I don't think that's something that we look at. I don't think we all look at that big picture as often as we should. Once I have found, you know, a handful of stocks that I like in this manner, my next step is going to go from Big Charts now to smartmoney.com. A lot of people are not familiar with this website. They think, oh, this is just a magazine website, but it's really quite interesting. They have some interesting and fun tools. Everybody has something a little different. I'm going to plug in liquidity, LQDT, I think is what it was. I'm going to plug that in to smartmoney.com. I am going to come down here to the compare tool below the chart. I'm going to click on compare, and they have this cute little Java chart which I just discovered is out of date. It wasn't out of date a couple of days ago, so I don't know what I did, but I didn't have time to update it tonight. And it brings up this little chart that'll dance around. What I like is it's going to tell me who it's going to compare itself to. Now remember, liquidity is like a you know, catalog or, you know, mail order type company. So it's going to be compared to other companies that are operating. I don't know why Abercrombie and Urban are in there, but it's going to compare it to like the eBays and the Amazons. I only look for two things on this website. The first thing I look for are long-term earnings growth. Now remember, we're on smartmoney.com website, so, you know, for them that's probably like a whole whopping 2 years. But what I'm looking for, this is that neighborhood house thing. I'm looking at stocks that looked good on an industry basis, and I want to see if it holds up in that space. Now, if I compare these, you can see that Amazon is just wiping the floor with anything else in its space. But liquidity comes in at 46.92% projected earnings growth rate. I am looking for stocks that have the best growth rate in their space at the lowest price, so, you know, comparatively. So now what I'm going to do is I'm going to drop down and look at PEG. And if I do, you can see that liquidity, which was second from the top in its space for earnings growth rate, is second from the bottom in price. It's at a 0.70. And that's great. That means the stock's on sale. People are spending about 30% less than the average, than the market. So I think that makes that a real interesting play. Notice that and think of the PEG kind of like our relative value on the stock selection guide. You know, that 80 to 120% range. We want to now here eBay is showing probably a PE of 26% higher than its growth rate. Amazon at 3 times over is obviously way too expensive. So this is where like liquidity comes in and looks pretty good. Let me try another one. You don't have to leave this area. All you have to do is come over here to this little box on the side. And I want to plug in, what did I have? I had some written down here that I wanted to plug in for you. Let's see. Let's try, which one did we have that was good? PIR. Let's look at Pier 1 on the screen. Brings it up and says, okay, yeah, I just read it. Okay, interestingly enough, Pier 1 does a lot of its business now on the internet, so it's lumping it in with these, and I don't think that's a really good comparison. Let's change this to long-term projected growth rate. 17.88% ahead of eBay. I think that's pretty interesting. Nothing's going to beat Amazon in this space. If we change it now to PEG, you can see the PIR drops down again toward the bottom. So here's another one that is second from the top in earnings growth projections and second from the bottom in its PEG ratio, which is a good sign, saying that it's under 1, it's on sale. Let's look at, there was one I wanted to show you, and I'm trying to remember what it was. One of the things that I didn't like earlier when I was playing with this, I didn't like the comparisons for Pier 1, so I went in and looked at what else was in that space or in that industry when I was at Big Charts. And a couple of things popped up. One was, Foot Locker was one I thought was, as far as the retail goes, and AEO, American Eagle, I think is that one, Ross Stores, and GPS is the Gap. I'm looking at more of like the retail type stores, and if I put these in order by if I come out and put these in order by projected earnings growth rate, you can see that like Foot Locker, for example, is kind of running middle of the pack. Netflix is at the bottom; they're not doing well at all. So Gap is at 12%, and it's practically 13 is practically at the bottom. But if you turn around and look at them on a PEG basis, see there's Netflix. It's got the worst return, but it's got the high. It's the most expensive, and of course that's because it's bad comparisons. But anyway, this is just a way for you to rate and look for stocks that have the best growth rate at the best price within their industry. So that's my 4-step process. From here, I would move on to step 2, and step 2 is things like looking at studying the news, checking, working with some fundamentals, maybe looking at some quarterly reports, listening to some conference calls, trying to get an idea with the future drivers of growth maybe. So that is that's that. I'm going to close that out and come back. Lori, at this point, does anybody have any questions before I go back and play with FinViz some more?
There was just one question. I guess somebody wanted you to pull up EBIX, I think when you were looking at the big charts with the industries. I don't know if you want to take a minute and do that.
Sure. I was looking, I think I looked at it earlier today, as a matter of fact. Let's go ahead and see. EBIX. We're going to click on industry. There we go. And we're going to come to the industry chart. Then we're going to plug in, let's take a look at 1 year compared to the S&P 500 for EBIX, EBIX. Now see this golden rod right now that's on the screen? That is the Dow Jones U.S. Software Index. Okay, it's kind of volatile, isn't it? Kind of bouncy. Let's take a look now at what that looks like compared to the S&P and this particular stock. Anyway, you can see the stock peaked back in February, and it really did a slow burn downhill till about June, July, and now it's working its way back up. The industry is just in line with the market, which is, I'm not saying that's a bad thing. I'm just saying I would rather be in an industry that's trouncing the market. It makes it a little easier, but the stock is definitely doing better than the market or the industry, and they're not doing so bad at 20% growth over the last year. So that would be EBIX. Now, I'm going to come over to FinViz. I'm sorry, not FinViz. I'm going to come to Navalier real fast, and I'm going to show you that EBIX actually has a really good rating. It's a BBB, which means it's got moderate buying. It'll give you some of its competitors. Let's take a look and see. You can see that it's at a B. It's at a B. It's at the lime green, not the dark green. And there's been no change recently, but that's okay because I like a B stock. The difference between the A's and the B's on Navalier, A's there's such heavy selling and buying, or I should say buying, that the price gets run up. The nice thing about a B, the moderate buying, is that the price, it's not as expensive of a stock as an A. You can see that sales growth has been steady, operating margin growth, earnings momentum, all steady growth. The earnings surprises and then subsequent earnings revisions from those surprises have been on the upswing lately. Cash flow is excellent, return on equity excellent, and that's how it got a B rating for the fundamentals that he follows. You can drop down on, if you don't know what EBIX does, you can drop down, it'll give you a full description and give you some news on EBIX right there on the Navalier website. So I hope that helps. Let's go back to FinViz. Remember we were talking about different, in your handout, I think it's 1, 2, the third page, I've given you some ideas for some searches. And these are, I didn't find these any place on the internet. I made them up. They're just from me, but I wanted to give you an idea of how you should think about what you're looking for. Let's take a look at dividends, the second one, just as an example. The first thing I would want to do is come up to Screener, and I would want to do my non-negotiables. So I want a minimum of, I'm just going to do I want over 100,000 shares. I want a buy or better on stocks that are optionable and under $50 a share. I want a PE of something, anything that's above 0. Nope, we're going to do return on equity of under 50%. We're going to do positive at least 10 years in the forward and backward, and I want a PEG of under 1. So now I'm down to my 77 stocks. So let's say now that we want to modify this in some way. And by the way, I probably didn't need to do all of my negotiables too, but if we come back to the descriptive screen, you can see on here that I have an average volume of 100,000. You might want to raise that. That might not be enough for a dividend stock because you don't want volatility. And like I said, the more shares that trade hands in a day, the more the harder it is to move that stock than it would be, let's say, a thinly traded stock where a couple of hundred people could move it 10%. We might want to go up to like maybe 500. I would say maybe even 1 million shares a day. Let me show you what happens. That there really are there are plenty of stocks. Maybe there's 23 just in our little grouping that have over 1 million shares a day trading hands. Okay, and the next thing that you might want to consider is I would keep my debt. I would want to keep my debt to equity. I'd like to give the stock a little bit of room to move. I'm going to keep it at under 50% because we do want to make sure that they can make their interest payments. That'll be important. Dividend yield. I think that's back on the descriptive screen. We definitely want a dividend yield. Now, when I first did this handout, I did 4%, and I ended up with something like 12 stocks. I did it at InvestEd and ended up with none. So I think that it goes to say that these things do change. I'm going to try 3%. Let's say we want over 3%. You notice immediately it drops us down to only 2 stocks, Valley and Intel. So today in this market that might be too much. Maybe what you can do is you can check off different scenarios to say what's cutting that back, and I'm betting it's probably the future earnings growth, maybe because we're looking at some really big stocks. Let's make that over 5%, and we get 2 more stocks back. If we say over 5% in the past, it doesn't help us. So that's not where it is. Probably, let's just do any PEG, and we get 9. Do you see how immediately you can tell where the problems lie? I'm going to come back over to descriptive and say, not only do I want a dividend yield that's higher than the market average, I would also like a payout ratio of whatever it is that makes you happy. I had in here under 70%. I wanted companies, just for income purposes, I wanted to make sure that they had enough money left in the till to pay the dividend. And these are companies that are so big that they're not, some of them don't have to. I wasn't looking for growth. If you're looking for growth, then you might want to drop that down to 30 or 40%. Even with what we have here, you still have 4 possibilities. And some of them are good. I mean, there's some good opportunities here. Only 1 Brazilian stock, the rest are all made in the USA. If we drop this to under 40%, then we lose companies. If we drop it under 50%, we should, we still, Vodafone comes on, but we lose, and maximum, we lose others. So that's just something to consider. And that's dividends. I'm looking at here and trying to see. One of the things that I don't know if I put it on this sheet or not, but one of the things that I was considering was, on the small caps. If we go to small caps, I'm going to click on screener. It's going to wipe it all out and bring us back to ground zero. If you look at, you can look at different industry ideas, but I was thinking about small caps. On small caps, you want to think about what would be important to you on a small cap stock. I'm thinking that what we're going to want to do is we're going to want to add market cap, right? And I would click on small cap stocks. Let's say under $2 billion. Okay, under $2 billion dollars on the cap. That would make sure that we only had small caps. That takes us from 6,700 to 4,200 companies. I would let's say U.S. stocks. Yeah, I would come over here to country, and I might want just USA stocks. And the reason why is because, as I say in my handout, God, it's hard enough to get information on small cap stocks that are here in this country. Can you imagine trying to get a handle on the financials of one in China or in Brazil or Chile or some of these other countries where it's hard to get information? That's going to that only drops us to 3,700 stocks, but they're all USA stocks where we know we can get the info. I would want to limit the debt to equity to no more than 20%. I'm going to say I want to see it under 20%. And the reason why is because debt can just absolutely crush a small company. And I want to make sure that that's not going to be a problem. Now that takes me from 3,700 stocks down to 1,300. So there are some small caps out there with debt higher than 20%. I want to add sales growth. Let's say we might want we might want 20% going forward. We might want to make sure this is a stock that drops it to 202. Let's say we want at least 20% in the past. That drops us to 37 stocks. Now we know we have a company that's been a fast grower in the past, and everybody thinks it's going to be a fast grower going forward. Net profit. I don't think there's any there's not a lot of small cap grocery stores out there, but I'm going to say, let's say over 10%. We want to make sure that there's plenty of profit coming in so they can afford to keep going. That drops us down to 25 stocks. And then finally, something that you might want to do on a small cap is that you might not care about on other stocks is you're going to want to limit the PE. You know how small caps, once they take off and they get that explosive growth, their PEs can go into nosebleed territory. So this is a case where we might want to add and just say, let's say PE's under 35. That gives us 12 stocks left. And that's a pretty finite list. I mean, that's a well-defined list of stocks from 6,700 stocks down to a dozen that meet such specific criteria, don't you think? Caribou Coffee is on there. That's in my neck of the woods. We love that stock, and it's doing this. The stock itself hasn't done as well as the company has, but Buffalo Wild Wings, that's another one. It's in this area. Any questions about that?
One question, Lynn. Why did you pick under 10% for the profit margin rather than over 10%?
Oh, sorry, I didn't mean to do that. Thank you. Thank you for saying that. I want over 10%. Shoot, now what's that going to do? Oh, we still have 10. We only lost 2. One of which was Caribou, and the other was we lost the Caribou in the Buffalo Wild Wings. Isn't that funny? Those are the ones we lost with that. You notice this this company is on here again. This is one that didn't look so hot on the previous stuff. It did not look good on the big charts information. But constant contact, that's another really interesting one that I was looking at recently. So Posen is another one that's a really good quality stock, and there's a lot of institutional buying on that stock. We've been watching that. That and Questcore go hand in hand. Those guys are direct competitors. Any questions on is there anything else anybody would add or take away on looking for small caps? Is there something I might have missed as far as the thought process, what you might want in a small cap?
I don't see any specific comments about something else they would like you to screen for with small caps. There is a question here about optionable stocks. If you were kind of optimizing all this for optionable, looking for good call returns, do you have any little tweaks that you might do to all this?
Well, here's what I would consider. Do you see the signal up here? You can come up here, and let me clear the screen. Let's start with something fresh. There we go. I'm going to come up here and say I want to see stocks that are at, let's say I want to buy some puts. I have some money. I don't know what I want. I want to buy something, but I want to buy something that I want to buy a put on a stock that I might like to later own. But you're going to have to do your research. But if we look at, there are 20 stocks today that are at trendline support. Oh, no, I'm sorry. That's not true. There's 100 because there's 5 pages of them down here. But what's really interesting is you can look at them in chart format as well, and you can pick out, try to go through and pick out some of the smooth ones. Obviously, we want stocks that are trendline support, but we want them trending up. So we would want something more like this than we would, a downtrend. But that's one thing that one of the things that we try to do in our club anyway is we just say, hey, listen, we want stocks that are optionable, and from there we've learned a long time ago that we just couldn't handle the volatility and the gut-wrenching roller coaster ride that we used to go on all the time when we buy stocks based on options. We did it for the options. We did it for the option income, and we finally came to our senses after having a lot of fun but a lot of grief. We finally realized, hey, you know what? We need to go for good quality stocks and find the ones, just say, hey, they have to be optionable, and then we look for the good quality stocks first, and then we look at the options second. So as long as you use that option, make sure the stocks are optionable, then at least everything you're looking at, you have that as an option once you have found quality stocks. But you can look for things in see here's stocks that are overbought, and here's ones that are oversold. Now, if you're a contrarian or a value investor, here are 10 stocks that are way oversold right now as far as the technical analysis go, and they look to be in a lot of different industries. And so you might want to look at something like that, because those would have pretty good put options, I would think. Technical, you have a technical screen here, and I do have some ideas on my my specific search sheet, that things that you can look at if you are looking for options. So, for example, stocks that are right at their 20 or 50 or 200-day simple moving average. That's something that you might want to look at and experiment with those. You also might want to look for stocks that based on relative strength index. So again, the overbought is 70, above 70, and the puts, you might want to sell puts on stocks that are oversold, that are below the 30 line, but that are trending back up. So that's all I can really tell you. We look for stocks first, options second, but we make sure that any stocks that we look at first are optionable, so that we don't have to go back and kick any of them out. That's about it. That's about all the time I have. I just want to let you know that I've been with Bivio a long time. It's been terrific, and I just want to thank you, Lori, and Rob too. Tell him that we've really appreciated what your community's doing, and letting us all participate with each other in these kind of forums. It's a real treat, and I want to thank everybody for coming tonight. And if you have any other questions, I'm here. Otherwise, thanks a lot.
Well, thank you, Lynn. I don't know about everybody else, but I just watched this and I'm just aching to sit here clicking on things. It's just so fascinating. We did have somebody ask a question if one of the parameters you can set on FinViz, when you were looking at small companies, she was concerned that they would have at least 5 years of history. Is there any way to put that in as a parameter when you're screening?
You know what? There's not on FinViz, but that's one of those things where that's going to fall in your second, your second phase. If you can find stocks that have really good criteria based on what you choose on FinViz, and then you take a look at them and you realize that the institutions are in favor of those stocks, and then you find that they are beating their industry and the market as a whole, gosh, and they're a really good quality stock within, they're a premium stock within their own space. Shoot, you don't have a whole lot left to research. I mean, it cuts out a lot of the research in phase 2, but that would be one of the things that you would want to put on your phase 2 list. So unfortunately, FinViz doesn't cover everything. But hey, where do you guys get your news? I have 4 or 5 places that I really like getting my news, and I love FinViz because, let's say, I own Seagate. And you can plug in your stocks, and it'll give you all the stats on any individual stock. But below that, it'll tell you who's upgrading, downgrading. And if you're not big FinViz users, here's a ton of news. And all the sites that I like, from Seeking Alpha, IBD, The Street, Forbes, AP, Investopedia. Motley Fool is regularly on here. Here's Fox Business, which I usually ignore. Barron's is on here. There are so many articles on here. Wall Street Cheat Sheets, another good one. Thomson Reuters. It's just a great one-stop shop to get your news on a stock. So this is usually where I come sometimes in the mornings, and I just kind of filter through and see if there's anything new that I've missed on my stock. And also, what I like about FinViz, if you're new to chart reading, FinViz will actually draw the lines for you. So if you're not really good at seeing the patterns or seeing the trend, it's kind of nice because they'll do it for you. That's all I have. That's all I have. I'm not mesmerizing. I'm, like you put in your little ad there, Lori. I think I'm more hypnotic, if anything. Some people just kind of get glazed over because I give so much information, but it sure is fun to play with these, and I'm not a real techie when it comes to this stuff. So I don't want to do a spreadsheet with 16 different columns, and I want to do as little as possible and find what I'm looking for. And I think FinViz just really fits the bill for that, don't you?
Well, if you don't like mesmerizing, how about fantastic, great presentation, another sterling performance. Another fantastic. Lynn is hip. Thank you so much. Bravo. Do those work?
Yeah.
You're getting a lot of great comments. Everybody's really enjoyed this presentation.
Well, I appreciate that. I just wanted to send out a hello to Bob Bigrig. I saw him come in early on, and I didn't have a chance to say hi. And Dan Hess is here tonight, so it's great to see all my friends. Sharon, I know you're there, and so I've really appreciated having everybody here. I'm going to sign out, take the dogs for a little walk. It's really getting chilly, believe it or not, up here in Minnesota. We're going to have a below 50-degree night, so I know fall is coming. Everybody have a great evening, and if you have any questions, garbagecop@gmail.com, or just send it to Club Cafe, and I'll see it there.
Thank you so much, Lynn.
Okay, take care, everybody. Have a good night.
Good night.